Economist here. Give me 1 second. Let me see if I can. There we go. Turn the Wi-Fi off so we don't get interrupted here with our video. Thank you for joining in on today's live stream. Today we are going to be talking about how it is that the Federal Reserve is conducting themselves when it comes to monetary policy, and how this confusion on monetary policy has really got a lot of people anticipating some moves from the Federal Reserve that are going to not necessarily manifest themselves into the economy in the fashion in which a lot of people would have anticipated. Ultimately, the Federal Reserve has changed the way that they conduct themselves, but nobody really recognizes that. I left links down in the description for you to a bunch of different articles coming from many different Fed officials. And if you look at many of these different articles coming from these different Fed officials, many of them right now are talking about how if inflation has come down, that it's now appropriate to cut Fed funds rate. And now this is not the same message that is being delivered from Jerome Powell. The confusion that is now taking place within the idea of what it is that the Federal Reserve is going to do with interest rates in relation to the inflation has got people like pulling their hair out. They have no idea on what it is that's taking place out there, especially when you have like Donald Trump coming out talking about what a horrible job that Powell is doing, and that he wishes he could fire him, and that if he had that guy out of there, then everything would be hunky-dory. And I think to myself, Powell is the spokesman for the FOMC. The Federal Open Market Committee votes on monetary policy. It's not the decision. Monetary policy is not the decision of one person. To change the chairman, to fire Jerome Powell, to replace him with somebody else, doesn't do anything except for change one vote on the FOMC. It will make very little difference. We have to listen to the communications of the rest of the FOMC. These are the voting members on monetary policy. They are the ones who are going to conduct monetary policy. It's not the president's job. It's not Jerome Powell's job. It is the effort of the FOMC as a whole. Now, once we understand that there is a monetary policy that is being conducted, a strategy that is being conducted that is not necessarily being communicated out there to the rest of the people or out there to the mainstream media, and is certainly not being communicated by the President of the United States, once we understand this strategy, once we see it, once we recognize it, it becomes very clear that the communications coming from the mainstream media are there to create the fear, uncertainty, and doubt that leaves the open-ended monetary policy that gives the Federal Reserve the ability to conduct themselves literally through their communications. They do not have to change anything about the Fed funds rate. They can ease or tighten financial conditions simply by using their words. Once we recognize it, once we see it, it becomes very clear. Now, I want you guys to take something into consideration right now. We have inflation expectation that is elevated and actual inflation that is low. There's two different things that are happening at the same time, right? Elevated inflation expectation, fear, uncertainty, and doubt about tariffs and war and supply chain breakdowns, all this other stuff has created this elevated inflation expectation. But at the same time, we have the indicators of inflation coming down. Now, whether or not you want to trust those indicators is up to you, but we're trying to figure out monetary policy through the lens of the Federal Reserve itself. Listen to this. Listen to this. The downward shift in inflation expectation has a second round effect on real interest rates. Think about this again. The downward shift in inflation expectation has a second round effect on real interest rates, the economy, and inflation. So inflation expectation has an impact that affects the economy and inflation. Inflation expectations, this is the key to it all. When policy is constrained by the effective lower bound, listen to this, the downward shift in inflation expectation raises the real interest rates. further diminishing the degree of monetary stimulus. Get this, guys. Listen, most people, when they hear lower interest rates, they think monetary stimulus. When they hear dropping of interest rates, they think monetary stimulus. But if you have an inflation expectation that falls, this, what did he say? How did he describe it? The downward shift in inflation expectation has a second round effect on real interest rates, the economy, and inflation. When policy is constrained by the effective lower bound, the downward shift in inflation expectation raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse and reducing inflation even more. Even in times when policy is not constrained, like we are today, expectations of below target in the future affects current decisions, putting additional downward pressure on inflation. This is so important to understand. How it is that they create an inflation expectation that is either elevated or diminished, and how that impacts the economy through the diminishment or the enhancement of the monetary stimulus. This blows people's mind. They do not get this. And I understand this is very confusing. This is super confusing for a lot of people who are like, man, can't it just be simple as money printer prices go up and explain it like that? No, it's not that simple. It's not that simple. If it was that simple, quantitative easing 1, 2, 3, and 4 would have produced the inflationary scenario that the Federal Reserve was looking for. They failed. They failed miserably. Quadrupling the balance sheet failed to produce an inflationary scenario for the Federal Reserve. I don't know how many people know that. Very few. Most people just think the Fed goes, prints up money and then we automatically have inflation, yet they cannot figure out why it is that the Federal Reserve is conducting themselves at the lower bound of zero and failed to produce an inflationary scenario because of that. The Fed is no longer using the adjustment of interest rates to conduct themselves. It's all about the communication. We can see through all the links that I leave down in the description, just about every single Fed official has come out saying something about the economy. They create fear, uncertainty, and doubt because many of them come out at the same time and somewhat disagree with each other. Some of them agree, some of them disagree. We have no idea what it is that the Federal Reserve is trying to communicate out there when they have so many different Fed officials coming out at the same time and disagreeing with each other. You know, this is part of their monetary policy to do that. Like literally for many of these Fed officials to come out at the same time and disagree with each other is part of the monetary policy. Here, you don't believe me? Look, we covered this yesterday. Let me bring it up for you again. This is Philip Jefferson. From, let me see, this isn't even that long ago, February 21st. It says right here, using textual high-frequency asset price data, the high-frequency central bank communication data, this research shows that investors' reactions to specific sentences communicated by the central bank are quickly incorporated into asset prices. He goes on to say in this speech, right? So they know that their words will change the prices. Oops. And then in this speech given, let me see. Oops, come back up here. There we go. May 13th of 2024, right? So a little over a year ago. He said this. The potential for misinterpretation is especially acute when many policymakers speak at the same time and disagree with each other. Take a look at the links that I leave down in the description. It's every single member of the FOMC has come out with some sort of statement, and not everybody is agreeing with each other. They do this on purpose. This is how they conduct their monetary policy, is to create the fear, uncertainty, and doubt, the open-endedness. That way their communication has a profound impact. They know that their words will have specific words that they use will have an impact on asset prices. He goes on to say this, right? The potential for misinterpretation is especially acute when many policymakers speak at the same time and disagree with each other. The diversity of viewpoints among policymakers lends itself to stimulating debate. Oh, he's too late. He's a loser. He's a bonehead. That's Donald Trump's debate, right? Everybody else is disagreeing with each other on it. This is how they do it, right? The diversity of viewpoints among policymakers lends itself to stimulating debate and ultimately better policy. It creates better policy because now the more fear, uncertainty, and doubt that you carry, the more of their words will have an impact on you, especially if they really start to put the forward guidance into the market that they will behave in a particular fashion before they do it. People will start to react to that. I mean, right now, you're already seeing interest rates somewhat coming down based on the idea that the Federal Reserve is going to be doing some sort of interest rate coming in July. Like, I'm reading articles how they've committed themselves to this July interest rate cut. And I'm thinking, no, they haven't. They haven't committed themselves to anything yet. Now, the interpretation, the misinterpretation, because of the many viewpoints coming from policymakers, has now the potential for creating a better monetary policy. This is how, again, this is exactly how they do it. Take a look at all those links that I leave down in the description, right? Every single one of these Fed officials is coming out talking about this and how it creates better or how their disagreement is actually creating the monetary policy enhancement that they are needing. Right? Here, let me bring up one more for you guys here, because this is good stuff. When this starts to take place and I can identify it and I bring it out here and I show you guys, like, I don't know how else you can view it any other way. Back to Jefferson's speech, he said this: policymakers know that their communications are likely to affect the course of short-term interest rates. You think? You think the things that Powell says, you think the things that these Fed officials say have an impact? Of course they do. Think about how many people right now are committing themselves to a July interest rate cut, right? These communications affect the course of short-term interest rates, other asset prices, and the associated economic outlook, resulting in an easing or tightening of financial conditions. Their communications are doing this alone. And we're going to see it happen right now. We are going to see the inflation expectations fall. Right? If the Federal Reserve stands still, this will create an environment that is actually going to diminish the degree of monetary stimulus that comes from it. And this is from the words of John Williams himself, the New York Federal Reserve president, right? Who straight up said it. Right? Let me see, where is it at here? Alrighty. Oh, here it is. The downward shift in inflation expectation has a second round effect on real interest rates, the economy, and inflation. When policy is constrained by the effective lower bound, the downward shift in inflation expectations raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse and reducing inflation even more. So many people got it backwards. So many people believe that the Federal Reserve is actually attempting to lower inflation to get it down. They are not. They are looking to have inflation run extra hot, extra long for an extended period of time to make up for the fact that they failed to achieve the 2% target over the previous 10 years. That's what they are doing right now. It's called the makeup strategy. Right? Google it. Federal Reserve makeup strategy. You don't believe me. Here, even in this speech, John Williams says this: one of the options is average inflation targeting, whereby the central bank purposefully aims to achieve an above target inflation rate in, quote, good times. When the lower bound is not constrained, properly designed and implemented, such an overshoot can offset the inflation undershoot during bad times so that the long-run average inflation rate and inflation expectations are in line with the target. This is what they're doing right now. They let inflation run extra hot, extra long for an extended period of time. The people who thought that the Federal Reserve had lost control and that a hyperinflation was imminent actually benefited the Federal Reserve's monetary policy. They couldn't find it. I mean, here's John Williams complaining the entire time that too low of inflation expectation was interfering with their monetary policy, and that they needed to let inflation run extra hot, extra long for an extended period of time to make up for the fact that they failed to achieve the 2% target. And as people were screaming their heads off about inflation and how the Federal Reserve failed and they don't know what they're doing and that it's running out of control and that they, are screwing everybody over, that attitude, mindset, belief actually benefited the Fed. They got their ammo back. So now here we are in a situation in which that the inflation expectation is somewhat elevated due to the fact of the tariffs, fear, uncertainty, and doubt of wars and supply chain breakdowns, but yet the actual inflation is quite low. I mean, if you want to believe their numbers, I mean, that's up to you, I guess. Unemployment doesn't seem to be rising significantly, although they do talk about the labor market getting weak. If you look at the chart of historical unemployment numbers, it's still very low. So here you got inflation coming down, unemployment is somewhat low on a historical basis, and although I do agree that the labor market is getting weak, it seems to me that the Federal Reserve has positioned themselves exactly where they needed to be. Most people don't believe it. Most people think that they screwed up, don't know what they're doing, and especially when you got a president who's coming out saying that he wants to fire Jerome Powell, and somehow that will change monetary policy. I don't know how clueless of a concept that really is for people to understand, but it doesn't make any sense. It's absolutely ludicrous on every idea. To even debate the idea is a waste of time and energy, knowing that they are using that misinterpretation against you, against the people, because they know that specific words and sentences will either ease or tighten financial conditions and change the asset prices. Tell me, how many people are waiting for the Federal Reserve to move in order to understand what it is that they need to do? Are they waiting for the Federal Reserve to move? Are they not listening to the words that they are using? Because that's the monetary policy, not the actions. How many people know that? Very few. Very few. Most people are stuck on this idea that somehow if you swap Jerome Powell for somebody else, you would have a different monetary policy. That is the dumbest thing ever. I mean, I don't mean to call people ignorant, but that's exactly what it is if that's what you believe. It's pure ignorancy. There's 12 voting members on the FOMC. We have to listen to the words that they are using. Once you get it, once you see it, it makes a whole lot more sense that if you lower the inflation expectation, you will raise the real interest rates and you will slow the economy down. Wow. Who knew? Who actually has internalized this besides maybe John Williams, the New York Fed president, the uneducated economist, and the crew? Very few people. Very few people have internalized that. Let me read it again. This is coming directly from the Federal Reserve voting member John Williams, New York Fed president. I mean, who else has more of an influence on monetary policy than the New York Fed president? Do I hear Donald Trump going out there, we need to fire John Williams? No. Has he ever mentioned John Williams' name? Probably not. Does anybody realize how influential this particular dude is? Very few people. Very few. All right. This downward shift in inflation expectation has a second round effect on real interest rates, the economy, and inflation. All right. The downward shift in inflation expectation raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse and reducing inflation even more. Major problem. Major problem for them. Yeah. So, again, I don't know what it is that people need to hear in order to understand that everything that they have ever learned about the Federal Reserve, every communication coming through the mainstream media, and just about every single YouTube economist out there has definitely steered you in the wrong direction. They just don't know. They're stuck in an old concept of how it is that the Federal Reserve conducted themselves. They used to use interest rate adjustments, the Fed funds rate, in order to stimulate or restrict the economy. That isn't the tool anymore. And I don't know how many times I have to come out here and show you guys constantly, over and over again, through their own words. This isn't me trying to make this stuff up. This is them communicating it to the other central bankers out there. They do not communicate this to the mainstream media. They do not communicate this in any other fashion or any other platform other than that of the other central bankers out there. You have access to this information. Why it is that people do not go and read through these speeches so that they can internalize the strategy for what it is, and instead make up some sort of artistic fantasy about how it is that the Federal Reserve is conducting themselves, basically lost on the idea of that Donald Trump knows more than the Federal Reserve itself, even though his communication out there is completely ludicrous and makes absolutely no sense. Donald Trump changing the Fed chairman will do nothing to change the Fed monetary policy. But he seems to want to reiterate that over and over again because he is misguiding the people so that they misinterpret what it is that's going on, because that ultimately creates better policy for the Federal Reserve. This is their words, not mine. All right? Let's check these out. Any theory why other central banks aren't following this playbook? They are. They are. That's what I find kind of comical about this, is that they are following the same playbook. The Federal Reserve is the last to react, right? But all the rest of the central banks did the exact same thing. They were all facing the same problem. It wasn't just the Federal Reserve. Here, let me bring it back up here a little bit. Okay. He says here, today we face an altogether different set of problems stemming from a very low neutral interest rate. That is, the short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. That's so incredible to think about. That John Williams was saying the problem we need to solve is the risk of inflation that is persistently too low rather than too high. So if you had a too high of inflation, that would solve your problem. Well, here we are. Oh, wow. Geez, got what you wanted, didn't you? John Williams, looking for higher inflation to save their monetary policy. Today's low neutral interest rates reflects a culmination of trends extending back 25 years. A quarter century ago, a typical estimate of the neutral interest rate in the United States was 2 to 2.5%, consistent with historical averages over the preceding half century. Since then, however, there has been a clear downward trend in the neutral interest rates in the United States and other advanced economies, with current estimates ranging from 0 to 1.5%. He was saying the same thing was taking place in other advanced economies. They needed to do this too. They needed elevated inflation in their countries in order to raise the neutral interest rate off the lower bound of 0. Once you raise the neutral interest rate, they can lower their central bank overnight lending rates equivalent to the Fed funds rate. They can lower those well enough below neutral to actually stimulate the economy. This is what all the central bankers around the world were doing at the exact same time during COVID. All of them. They all use the inflation expectations for their advantage, to lift the neutral interest rate off the lower bound of 0, because this was the problem they faced. Right? Since then, there has been a clear downward trend in neutral interest rates in the United States and other advanced economies, with the current estimates ranging from 0 to 1.5%. Other nations follow this exact same game plan. They can't do it the exact same way. They have different rules and regulations and processings and all the other stuff that goes along with it. Ultimately, elevated inflation expectations save the day. Not for us. The working class got damaged. We got beat in the face from it, but they knew that they were going to do that to you. They said it. I mean, don't think for a second that it was an accident. They knew that they were going to create pain and misery. They knew it, right? Right here. August 27th of 2020, before the inflationary scenario, August 27th of 2020, right? COVID was just kicking in. We hadn't had the supply chain breakdowns, hadn't had all the crap happen yet, right? It was just starting to take place, but we hadn't had inflation take off yet. This is what it has to say. This is what Jerome Powell was saying back in August 27th of 2020. He said the undershoot of inflation from our 2% long-run objective is a cause for concern. They were major. John Williams was concerned about it just just a year earlier, year or two earlier in his speech, right? So now still same cause for concern in August of 2020. Many find it counterintuitive that the Fed would want to push up inflation. Not only did some of us find it counterintuitive, some of us were trying to figure out how the hell you were going to do it. I mean, you just want, like, counterintuitive that the Fed would want to push up inflation. Well, here you had quantitative easing, expansion of the balance sheet from $850 billion to over $4.5 trillion, failing to produce an inflationary scenario, and people are finding it counterintuitive that the Fed would want to push up inflation. I'm thinking it's counterintuitive that you can actually do it. Right? Most people just think, oh, all you have to do is just turn on a money printer. You'll have automatic inflation. Well, a quadrupling of the balance sheet failed to produce an inflationary scenario for the Federal Reserve. It was a cause for concern. Right? The persistent undershoot of 2%. After all, low and stable inflation is essential for a well-functioning economy, and we are certainly mindful that higher prices for essential items such as food, gasoline, and shelter add to the burdens faced by many families, especially those struggling with lost jobs and incomes. See, he knew it back then that you, at the lower end, were going to suffer the most. People who have a bunch of money, what are they going to do? Oh, well, I guess geez, this stuff is real expensive, but they do cut back? No, of course not. They just keep buying the same things that they were always going to buy. It's the people at the end of the line who have to cut out some of their necessities because they simply can no longer afford them. It's the biggest burden is at the end of the line, and they knew it. They knew back then that it was going to happen. So here you are experiencing the pain and suffering of elevated inflation, and they knew that it was going to take place for you in order to save their ass. It was a cause for concern. The persistent undershoot of inflation from the 2% long-run objective is a cause for concern. Many find it counterintuitive that the Fed would want to push up inflation. After all, low and stable inflation is essential for a well-functioning economy, and we are certainly mindful that higher prices for essential items such as food, gasoline, and shelter add to the burdens faced by many families, especially those struggling with lost jobs and incomes. Yeah, it does. It's a painful experience, a major painful experience that you knew was going to come. However, if you don't experience, you at the lower end, if you do not experience this pain and suffering and misery, right, the inflation that persistently too low can pose serious risks to the economy. You're going to have to suffer through this pain and misery in order for the rest of the economy to perform and do well. They knew they were going to cause pain and suffering to the lower income households. They knew it. However, without that pain and suffering that they were going to inflict upon the working class individual, knowing that their paycheck wasn't going to make it through the rest of the month, knowing that they were going to have to cut back on their necessities, knowing that it was going to be this painful, miserable experience for them. However, inflation that is persistently too low can pose serious risks to the economy, pose serious risks to those who have the money. See, everybody else, sorry, we have money, you're the ones who are going to have to suffer the pain. Because if you don't, we're going to suffer too. That's essentially what they're saying there, right? Inflation that runs below its desired level can lead to an unwelcome fall in long-term inflation expectations, which in turn can pull actual inflation even lower, resulting in an adverse cycle of ever lower inflation and inflation expectations. See the problems that they were trying to solve? They were trying to solve a problem of too low inflation expectation that was interfering with their monetary policy in order for them to conduct themselves, and they knew that the process that they were about ready to go down was going to cause pain and misery and suffering upon the lower class people, and that's exactly what they did. I warned you. I warned you that this was going to happen, that they were going to let inflation run extra hot, extra long for an extended period of time to make up for the fact that they failed to achieve their monetary policy of an inflation target of 2%. I've been pushing this statement, these speeches, since the day that they gave them. And I've been showing you constantly over and over and over again why and how that they are doing this. And as people are still anticipating that the Federal Reserve is going to fall to the pressures of Donald Trump, they are losing their ability to conduct themselves in the most appropriate fashion. That's what happens to the people who follow that. You must understand this stuff for yourselves. There is literally no place on the internet that's going to show you this other than the Uneducated Economist. I cannot find a single person. I cannot find a single news article. I cannot find anybody else out there who is conducting this strategy conducting themselves with an understanding of the strategy to the level that I have tried. And this is all from the words of the Federal Reserve itself. I don't make this stuff up. There is nothing that I make up. I can back up every single thing that I say with a statement coming directly from the Fed itself. All right, moving on. Jay Powell is a lame duck. It doesn't matter, Buck 50 2000. Jay Powell really has no impact other than the feelings that you have from the words that he delivers. That's the impact that Jerome Powell has. So think about that for just a second. If you are upset with Jerome Powell, you don't like the way he makes you feel. All right? Your feelings are getting in the way of logic. That's what's happening when you blame Jerome Powell. All right? Because nothing changes. That's what's most important about it, right? To even put thought, energy, time, or belief, or debate into the idea whether or not the Federal Reserve would conduct themselves differently, whether or not Jerome Powell was there, is like it's a worthless thought, right? Got to focus in on the FOMC itself, all the voting members. You're the only person who has found these things out, Simon. Thank you, Brody. I really appreciate it. And you would know because you're here all the time to get this information, to interpret it, to break it down, and then relate it to what other people are saying out there. And when you cannot find anybody else who is talking the way that I am, like literally there is nobody else out there who can do this. I will debate anybody. I don't care who it is. I will debate anybody on monetary policy. I do not care who it is, right? I am so sure of it. I am so confident in my information, my research, and my belief in what it is that's taking place. I can go up against anybody. Any given time, drop of the hat. I do not care. All right? I don't need this computer in front of me. I can recall this stuff on my own. That's how much I have internalized this information. Now, other people out there, I've listened to them, they changed their tune. They changed, like, the idea that Gundlach was saying something about how the Federal Reserve was bumping around like Mr. Magoo, right? That right there is a misunderstanding of what it is that the Federal Reserve is doing with their monetary policy strategies. I would not listen to them for a second longer. In fact, I don't. I look at that and I laugh at some of the things that these people are saying. These are billionaire investors in charge of billions of dollars, and they cannot get the Fed right. They cannot get this monetary policy strategy. They cannot dial it in. I mean, here the uneducated economist sitting in a 99 Ford Explorer is able to dial this in and explain it in a way that then gives the people the ability to recognize what it is that's happening out there with the monetary policy. And this other dude saying, don't listen to the Fed. They're bumping around like Mr. Magoo. They don't know what they're doing. And I'm thinking, man, that is exactly what the Federal Reserve needs billionaire investors to say out there in order for the Fed to continue to conduct their monetary policy. It's totally working. And the more people who are confused about the Fed, the more the Fed is able to use their words to guide the markets. And it's working. It's obvious. You know? Just look at all the links I leave down in the description to all the different Fed officials who are coming out, and look at all the disagreeing that takes place. I mean, just from 30 days ago to now, nobody has any idea on what it is that the Federal Reserve is trying to do. That's the way the Fed wants it. The billionaires are in on it, right? That's exactly right. That's what I was hoping somebody was going to say, right? Joshua, that's exactly right. Are they that dumb? Of course not. Of course they are not that dumb. If the uneducated economists can see it, then I know they see it too. And when they come out and say that, oh, the Fed's bumping around like Mr. Magoo, they are playing the game too. That's exactly right. He is lying, and he's doing that to conduct the monetary policy alongside it, or he's that stupid. I don't believe that. I don't believe he is that stupid. He would not be in a billionaire investing position being that dumb. He knows exactly how it is that the Federal Reserve is conducting themselves, and he is helping them out by doing that. I think you're being blacklisted on YouTube. You should have way more people watching. Well, I appreciate it, and you know what? We have the right people watching right now. 311 people who are getting this information, internalizing this information, and using it to better themselves. These are the appropriate people. These are the people who should be watching. Yeah. Everybody else, they'll figure it out one day. When they finally get frustrated with the doom and gloom and the misunderstandings and the wrong interpretations of what it is that the Federal Reserve is doing out there, we are going to find more and more people coming to this channel to really understand and internalize the Federal Reserve's monetary policy for what it really is, so that we can conduct ourselves appropriately. I have not changed my tune. I have been saying the same strategy and talking about it and sharing it with you over and over again for years. My tune doesn't change because the Fed's strategy hasn't changed. People's misunderstanding and interpretation of the strategy has changed. The mainstream media communication has changed. Everything about that has changed. But the fact is that the strategy is still being conducted exactly the same way that they had talked about back in 2018, even before that. Once you see it, once you recognize it, everything else, it is very low. I take all that information that comes from the mainstream media, CNBC, from the press conferences, all that other stuff, I take it all with a grain of salt. That is all out there to guide the mindset of the people. The reality is within the speeches and the documents themselves. That's where it's at. All right. What I love about this community, no censorship, freedom. Yeah, absolutely. You know, the only thing I ask is that you just don't put out hate comments and stuff like that, because the YouTube algorithm has a tendency to then block these videos from being spread if the comment section is full of what should I say, non-advertiser friendly comments. If that's what ends up being in there, then the videos don't get spread. So that's the only thing I ask, you know. All right. I just love the passion you show, Simon. Well, thank you. I mean, the thing is like I put a lot of work and time and effort and energy into trying to not only create the theory, but then also trying to create the community and the understanding, so that we are able to then use this information for the best of our abilities. That's really what the ultimate goal of this is, right? And really, the ultimate goal of it was for me to be able to do it. Right? That's what I was trying to do here, was trying to figure out a way for me to do it. By us having the conversation and doing this every single day, breaking this information down, all of us are figuring out what it is that we need to do individually. And it's working. I know it's working. I've had so many people come to me and say, man, I cannot believe how much my life has turned around since I started watching your channel. I am absolutely amazed by how many people have come and said that to me. And as long as I still have people saying that to me, then I know that what I'm doing is being useful and helpful. And that's the entire thing. That's the entire goal of all this. All right, guys, I got to go. Uneducated Economist, you let me know.